Awesome. Thank you so much for joining us. Before we kick off, I think it's always the best to just hear from each panelist themselves, just to do a quick introduction of yourselves. What are you currently busy with, and any useful other backgrounds that we'll be touching on today. Awesome. Arno, start with you.
Sure. Hi, guys. So I'm actually, I've just embarked on the next phase of my career. So after having been in Standard Bank for the last 13 years, I recently joined Investec. And I'm basically looking after their corporate platform infrastructure, which is something that Investec is focusing quite a lot on, and moving quite dramatically into the business and corporate space. So looking forward to that challenge.
Hi, everyone. I used to work at a consulting firm where I ran our customer experience and digital practice for Accenture. From there, I joined MTN a few years ago, and I was responsible for building out their online business. And more recently, the portfolio is extended a little bit, and we're looking at how to leverage the digital opportunity across our business, not only for customers, but also for internal capabilities and so on.
Excellent. Lovely to see some familiar faces in the audience. So I am Meagan. I look after fintechs for Visa across sub-Saharan Africa. So it's always a wonderful opportunity to serve fintechs from Nigeria to Kenya to DRC, Kigali, and of course, very much in South Africa. My background, I've been in banking for many years. Don't judge me. I was an attorney for a few years before that. And while in banking, took many roles from innovation, product, executive of retail across a few banks, but spent pretty much the last 5 years really operating across Africa. And just one snippet about me is that one of the things I love about exploring across our borders is the fact that everyone moves and shakes. And sometimes back home, we kind of like to really toe the line. So I love to travel across borders and then come back home and see how we can shake things up.
Thanks, Meagan. I want to start this discussion. I think it's such a broad discussion, and there are so many areas and elements we can touch on. And I'd like to focus specifically in the different business and areas that our panelists are in today and extract value from that. And I want to start with specifically the consumer. The landscape in South Africa in terms of how consumers interact with e-commerce, with retail, with businesses have shifted dramatically over the last 10 years. And I want to start, Gareth, on your end around just giving us a bit of a picture around how the use of cell phones have changed and what you guys have seen. Currently, estimated that the smartphone penetration rate in South Africa is around 90%. 70% of people with these smartphones engage in online shopping, and 60% of them are using online banking. And then are shopping 5 hours per day phone screen time. Around 9 out of 10 people start their day by picking up their phone. And I think this is an awesome platform to start and actually thinking about what are the needs and what are we expected to see in that space. But I would love you to touch a bit on that and give us a bit of insight in terms of what you're seeing here.
Cool. I think just in terms of the consumer behavior when it comes to connectivity and mobile usage, I think you mentioned it, we've actually got a very high degree of smartphone penetration in South Africa, especially in comparison to the rest of Africa. I think for that remaining sort of 10% odd, actually, ICASA is going to be passing regulation for the mobile operators to decommission or shut down 2G and 3G network coverage, which actually means that those consumers that are still having feature phones and it's not on smartphone enabled will have to become smartphone users in the very near future, and the operators themselves are going to be responsible for migrating those customers. So I think that's quite a positive step in making sure that everybody is online. And I think beyond mobile connectivity, I mean, we've also seen a massive surge in people connecting to the internet from their homes. I mean, in the old days, not everyone here is that old, so this might be foreign for some in the room, but to have internet at your house, you used to have a copper line, an ADSL line provided by Telkom or the likes. And I mean, in the last few years, we've seen a wider range of options, anything from a mobile connection using 4G or 5G technology, air fiber, and also fiber coverage itself, is quite prevalent now. And you can get an internet connection at your home uncapped for a mere few hundred rands, whereas, I was probably paying double that for my 5 meg line 10 years ago from Telkom. So I think it's just, we've seen a massive surge of people that are online. And I think, even as a business, while stuff like voice has been declining, every single year we see a massive increase in data usage, which means that customers are really consuming services more than ever in the past.
Thanks, Gareth. And I want to build on that and would love to touch on it a bit later when we actually look at the payments journey within MTN and what that actually means. Meagan, I want you to plug in here. You sit almost in a chair where you can see a lot of what's happening in the industry. And on the back of what Gareth just mentioned around what we're seeing around the usage of phones, what are the current trends that you're currently seeing in South Africa when it comes to opportunities and some of these trends around payments and specifically focusing on what we're seeing on the phone in the phone space?
Excellent. So firstly, and it wasn't something I was planning to talk about, but when you were talking, it came to mind, is we've seen a number of fintechs in the edtech space. So with a number of people looking at homeschooling, like obviously the cost of education and tertiary education, a number of people are now saying that your phone is going to be transformed into this. So I come across a number of fintechs on a daily basis that are looking for Visa support in terms of how to enable social impact as well as payment credentials, etc., just to enable technology from an education perspective. But taking a step back, there's really 3 big trends. The first one we've spoken a lot about already, so I won't harp on that, but that's the embedded finance. So really not even thinking about payments. There's an interesting forecast where they say by 2030, 73% of payments globally will be done by organizations that aren't FIs or financial institutions. So a number of you in the room, I know, are probably those movers and shakers that are going to be orchestrating those payments. So that's really interesting from an embedded finance perspective. One of the other points that we're working on a lot, specifically in Africa and in South Africa, is around digital identity. So in terms of digital identity, if you think about the internet a couple of years ago, you could be this person on Facebook, you could be a different person at home, you could be a different person at work. But now everything is being correlated and integrated with the power of AI. So you've got almost a single persona that people are being able to register. And what the governments are actually working with the schemes on is how do you create a digital identity from a government perspective that's integrated, but also ties into like a payment credential. And the vision of that is to say, well, on an ID document or a card, how do you actually transfer that to be a credential? So you can imagine all the inflows and outflows from government, that's a flow. And then if you've got someone that's a SASSA grant and they've now working around with their IDs and a digital credential, is how do you tie in from your cell phones, etc., that it's all on a device and it's not actually on a card. And then the last one that we can't forget is the creator economy. So 1 in 4, I don't know how many cool kids are in the room. So who all knows Mr. Beast? Hands up. Wow, I'm impressed. Either you're cool or you've got young kids that are obsessed with Mr. Beast. So 1 in 4 people globally contribute to the social economy, one way or another. And you can't believe that if you are a social content creator in South Africa, how difficult it is to actually get your money and get your money paid out. And then if you could be Mr. Beast earning, I think, $83 billion, how do you actually get a loan from that? How do you qualify and apply to a bank to say, well, I don't know, I just posted a TikTok video and I got some money, so I'm sure it's sustainable and it'll cover me for the next 20 years. So it's really that payment trend that's all underpinned from the mobile devices, and how do we all think differently to make sure we enable that?
Amazing. Thanks, Meagan. I want to head quickly to you, and I think you spoke a bit about Investec, but before Investec, you were quite involved in creating Shift in South Africa, and I think the journey there is quite fascinating in looking at when you started. what the problem was, the need is, how payments enabled that, and how that journey has evolved over time from a user perspective, and what you're currently seeing in that space from an innovation side. It would be good to hear a bit about just the business and then some of those trends.
Yeah, sure. Well, just a comment to what Gareth was saying. Looking at the average age of the Stitch team, I wonder how many of them ever heard a 56 kilobit per second modem dial-up tone. I don't think there are many of you guys that have heard that, but I did hear a lot of that back in my youth. Yeah, so I think the shift journey, the shift journey started back in 2016, when Standard Bank, we were looking at the foreign exchange retail segment, and we were seeing that the business was really underperforming. And fundamentally, the reason why it was underperforming was because as a retail customer, Standard Bank customer, the only way to do anything Forex related, and by that I mean if you want to buy foreign notes because you're traveling overseas, or you want to send money overseas, or you need to pay someone or pay a supplier or something like that, the only way to do that was literally to get in a car, go to a branch, and you couldn't go to any branch. You had to go to branches that had bureau de changes, stand in a queue for up to an hour, and get to the front, and then it would take on average 45 minutes to fill out the forms and do that thing that you wanted to do with foreign exchange. And obviously, that I guess getting back to the point about smartphones, digital technology, and the networks, quite frankly, have enabled everything, financial services, communications, absolutely everything to now be done in the palm of your hand. And so when we said, well, how are we going to solve, for this business? The only way to do it was to digitize. But I think there was an opportunity for us to not just take a capability, an old-fashioned bank capability, and say, okay, well, I'm going to put it onto a digital front end and just submit the form digitally. It was really to reimagine what foreign exchange means for ordinary people. Is this thing working?
Yeah, you're good.
What foreign exchange, how it works, what are the real customer pain points around foreign exchange? Because actually, Forex is such a broad thing that solves so many different needs of people, from an investment need, from a travel need, from a procuring goods from overseas need. They can be vastly different things. But there's one common element, and that is that there's this element of I need dollars, or I need currency in order to complete this transaction. And so what we did, and the breakthrough for us, was we separated the thing that I'm trying to do, in other words, send money offshore, travel offshore, from the actual I need foreign exchange to do that. And what I mean by that is now we said, buy your foreign exchange whenever you want. Get that money in a wallet instantaneously. So I can buy my dollars today when the rate is good. I get a live rate, and I can secure my dollars, and it's available to me instantaneously, and I can keep it there for as long as I want. And then when I'm ready to go traveling, which might only be in 6 months, or ready to make that payment for my kids' education, or that thing that I want to buy off Amazon, or whatever you want to do, I have the currency locked in, and it's available to me at that point in time. And that was the big change, because everything else that we did was, well, I'm going to go to travel to London, and if the rate's really bad, well, that's the rate's bad. Nothing I can do about it. If I need to pay for something on Monday, hopefully the rate will be good. And it was breaking up that cycle, and I think that was the first fundamental breakthrough for us, and then being able to couple that together with really efficient cross-border payment capabilities, where now, on Shift, we use really great payment providers. In fact, Visa is one of them, where you can send money into a bank account in the UK and it will clear within an hour. I can send money to the US or to a bank account anywhere in Europe, and it gets there same day. It is faster, well, apart from now RPP coming along, but before RPP, it was faster for me to send money from a bank account in South Africa on Shift to a bank account in the UK than it was to send it from an Absa account to an FNB account. It's crazy, but it's all because we started thinking about things differently, and we started thinking about who are the companies and the businesses out there that are specialists in this. Not the banks, not necessarily the banks, but companies that might leverage bank rails, but are able to offer a service that is significantly faster and more efficient than what's traditionally available through the banks. And that was really the breakthrough, another one of the breakthroughs for us.
I just want to add on in terms of out-the-box thinking. We're recently working with a fintech that's actually almost solving the KYC element. And what they're doing is they're quite far down the line in talks with the regulators to get this approved. But they're doing the geolocation, so saying that if you've been in the same house with a geolocation for X amount of days, then that's perceived, or weeks, that's perceived to be your residence. And that, like I say, if they can get this right in South Africa, we've spoken about our regulators, if they can get that right and across the line, that really could be an out-the-box solution, just like you've done.
Excellent. Thanks, Meagan. Thanks, Arno. Arno, when we discussed before the panel, we spoke a bit about the journey of Shift and just how the adoption curve, what that looked like. And I want to quickly touch on this because, you know, this, and we'll cover some of these technologies in a bit, but there's so many different technologies, but at the end of the day, what does that adoption curve look like, and what are the hurdles in the adoption curve to these new and upcoming technologies? Gareth, I want to come to you here. When it comes to airtime data purchases, there's a few key needs there. Things need to be fast, it needs to be easy, etc. But you mentioned that some of the interesting insights that you guys saw when it came to payment adoption and that journey where it seemingly people drop off. Tell us a bit about the why there, what's been happening there, and then I think Meagan can also plug in on that.
Yeah, I think maybe speaking from an MTN perspective, and even maybe more broadly speaking to that. I mean, if you look at user behavior on our platforms when it comes to transacting, I think still, and this I think has never changed, the biggest point of friction and the biggest single intersection where people actually drop off is when it comes to payments. I mean, that's been a trend, I think, long time in e-commerce. And I think, if you had to equate the experience to a physical in-store thing, if you had to walk into a TFG store or a typical shop and see people walking around the store trying on various garments, filling up a basket of groceries, walking to a point of sale, and then when they get asked to pay, just drop everything and run out the store. I mean, that would look absolutely bizarre. And that's typically what happens most of the time when we see people, transacting online. So payments continues to be a friction point, and for various reasons. Some people might not feel comfortable utilizing or, paying for something and thinking that there might be a security risk or not getting the product at the end of the day, and so on and so on. So, that's for us one of our key focal areas now, and I think payment's never really been a friction point in a physical transaction, a card-present transaction, or even using cash. And I think we're at that point now, for the first time ever, where we're getting to parity in the digital space with payments, especially with, I think for me, what excites me the most, earphones, what excites me the most is digital wallets. I mean, I'm an avid user of Apple Pay, and I think once we start incorporating that into online transactions, Apple Pay, Google Pay, Samsung Pay, we are at the first time on parity with in-store. And I think for people where it has been a little bit of a barrier, they're using the same mechanism that they're used to using inside a physical environment. And I think that's going to really bridge this gap for us.
Makes total sense. I think one comment I want to make there, something that from Stitch's side that we've developed over the last 2 years, specifically with the way we work with enterprises, how do we leverage the rich data specifically from that enterprise and able to increase and optimize that entire user journey? And some of the insights we've come to has been fascinating, and this is a part, I think, about Stitch that I'm really excited about, is how we start partnering beyond the payment space. Because, an example, we would see that if we track retention graphs for specific users in a case where there's a return user case, we can see certain months are higher than other months. And then we dive into that and we can start seeing, for instance, there was a marketing campaign that launched there, or the type of users that they've managed to attract are the type of users that are more easily willing to take that last step and not drop the basket. And some of the UI components and how we've iterated with the clients with that, with our marketing team, as we've seen significant uptake in that conversion rate. And it's good to see as the industry goes and as, I guess, population matures and become more used to these methods, how that conversion rate would start to become parity to what we're seeing in the physical space. Meagan, do you want to comment?
Yes. We're actually running a pilot at the moment, and it's exactly to your point, is how do you replicate what physically happens in a physical store? And it's the tap-to-own phone technology and almost converting every phone to a POS machine. So, and it almost is counterintuitive because it's almost like it would be a physical movement that you're going to take your Apple Watch and tap it on your own phone. But it's interesting so far, the pilots and the research that's coming is that, again, customer behavior likes this. They're like, oh, this is secure because it's my phone. So again, the back-end technologies are all the same, but it's just so interesting to understand what customers perceive that. So that's something we're exploring at the moment. The previous panel touched on passkeys. We're seeing passkeys as a critical element for the next 12 to 24 months. We really think it's going to transform the way everything is operating. And there's a word that I haven't heard a lot today, which you can't stop hearing when you go to conferences at the moment, is AI. And if we think about AI, the big tech companies, they are spending at the moment, as fortunately in San Francisco about 3 weeks ago, and visiting Google, etc., they're all spending about 15% on their revenue on R&D specifically around AI. So it's around how do we take passkeys, all of these other elements, and creating that. And then there's one other product that we also seeing quite interesting is a flex credential. So flex credential would be that you'd have a credential, but behind that credential, you could have all of your respective Visa products, but you could also have potentially non-Visa products. So you could have your loyalty solutions. So when you're coming to checkout, okay, I wanted to pay with this card. Oh, I forgot, I'm a bit overdrawn. Okay, let me just quickly. But it's not that you have to reload. Oh my goodness, I don't have time to load another card. It's a flex credential. Okay, toggle. Let me go pay with my Discovery loyalty points or whatever the case might be. So we're really seeing that as an interesting trend.
Awesome. Thanks, Meagan. Arno, currently at Investec, there's a lot happening in the enterprise payment space. You started your career early on looking at some of these problems and optimizing around that. I think the one was digitizing of physical cash. How do you get cash in a bank account almost immediately when it arrives at a shop? I think that's a fascinating story. But I want to hear, maybe touch on that briefly, but then I want you to unpack, we spoke a bit about today. What do you foresee the impact of rapid payments going to be on enterprises and the way enterprises transact in South Africa?
Well, thanks. I think prior to getting to Standard Bank, I worked a lot in cash management solutions, and that is the physical cash side of things. And really, it's a common problem that businesses, individuals have. It's about how do I get the value, into my bank account and in a way that I can utilize the benefit of that value as quickly as possible. So back then, what we did is we built effectively a smart safe where a retailer could, like a petrol station could deposit physical cash into this device. It would secure the cash. It would be connected up to by GPRS or 3G to the cloud, and effectively then as the cash was deposited, provide a view of exactly how much cash was inside the device. And the offering that we gave them was, put your money inside there. We know categorically how much money is inside there because the machine will tell us how much money is inside there. And what we'll do is we'll give you value for that cash, on a same-day basis. Now, typically, if you think about a retail environment, what would happen is you go into a store and you give the guy cash. Now, that cash, depending on the environment, but certainly like in a petrol station, there's a cash delivery vehicle or a CIT company's got to come, pick that cash up, take that cash through to a bank. It gets to the bank, it's got to be counted at the bank. It can take days before that money actually reflects inside the bank account and is usable. And so the offering was, put it inside here, we'll give you the cash. And that really transformed and helped to transform the business in many different ways. Number one, having that cash available meant that they could pay suppliers straight away, they could pay salaries, so they had a less of a cash flow crunch. and they could actually treasury management manage that cash so they could get benefit interest on that cash, overnight interest, 2 to 3 days additional interest on that cash. And so I think, the essence of everything that we're trying to solve is speed of getting value, the value that I give to somebody who's giving me physical cash or electronic cash or whatever that is. I want that in my bank account so that I can do whatever it is that I need to do with it as quickly as possible. And so, moving into enterprise and corporates and small businesses, it's the same situation. Today an EFT can take, a normal standard EFT takes, if it's from one bank to another bank, it's overnight settlement. So, there's still a delay. If you do it after hours, it can be even longer than that. And I think now with the introduction of RPP in particular, it's making that significantly more efficient and faster, and with that comes a host of benefits for businesses, individuals, enterprises, etc. And I think we're really starting to see the industry move in a very positive direction. It's going to have big implications for incumbent banks, but it's also going to have very positive implications for the entire ecosystem. So it's very exciting to see.
Thanks, Arno. Just keen to hear a very quick follow-up on that. How does a bank like Investec, we've got some other banks in the room today, think about the space where there's all these different types of innovations that's coming forward? How do you partner in a place like this to really make sure you're at the edge of all of the changes that's happening, to make sure you can be in a position where you can actually take advantage of that?
It's a good question, and I think there's going to be different perspectives to this. I think some of the incumbent banks have got models, that they've used. They generate a lot of transactional fee revenue from the old way of doing things. If I can charge a big corporate that's doing thousands, if not hundreds of thousands of EFTs a month, 10 Rand per EFT, that's value. And I think that there's look at it in one respect, it's certainly going to, moving on to RPP, is a threat to that revenue model. But there are other opportunities that arise as a result of that. Getting funds into the account sooner has also got benefits from an interest perspective. And I think that the reality is that these things are coming, whether we as a big bank want to accept that or not, they're coming. And I think that what we're seeing is that the banks understand this, and they're really embracing the change. We're seeing that on RPP at the moment. There's RTP, which is actually in testing as it is right now. I think all the banks are involved, bar one that didn't quite make it in. And I think it's now almost becoming a competitive advantage for the banks. So if I'm a customer and my bank offers me a cheaper, faster way of doing it, it's an advantage. And so, the world is changing, and we have it will disrupt things. It will disrupt current models, but we have to embrace those and move forward, and the world will ultimately become a better place because of it. So it's very exciting.
Thanks, Arno. Great summary. Not the easiest question to answer. Gareth, very quickly, partnering, and same question to you. Partnering and finding the right type of provider in the market for a company like MTN when it comes to payments. How do you think about that? Maybe some examples of what works and just general strategy around that.
Yeah, so I mean, we're not a payments. We don't have payment specialists, and obviously it's a core capability that we require. And I think for us, we're always looking for partners that one can provide thought leadership and help advise as to how to navigate the payments landscape. And then I think with all the innovations and the changes coming into the industry, it's very difficult for us as a company to keep abreast of those changes without a partner. So I guess in the partnership, our expectation on the likes of a Stitch is to really help be abreast of those changes and help make it simple for us to leverage the new payment methods and the changes coming on board, but really to strip out that complexity from our environment, and for you guys to take that complexity on into your environment and give us the benefits of that. So I think that's what we really look to in a partner, as well as being good human beings and dealing with good people, which I can say you guys are. But yeah.
Thanks, Gareth. Meagan, and then I quickly want to open it up to the floor very quickly for 5 minutes question. From where you sit now, there's a couple of months that's ahead where there's a lot going to happen in the payment space. From a Visa's perspective, what are you guys most excited about, and specifically in your role, what are you keeping your eye on in the next 6 to 12 months?
I think it's selfishly, in my role, it's the emergence of fintechs. I think that in South Africa specifically, fintechs have been very prominent on the acquiring space historically and haven't really been very much on the issuing side. We're slowly starting to see how the issuing side in the fintech ecosystem is starting to boil up. And that's going to be an interesting point, exactly to your point, that sometimes when the landscape changes, it can be a big threat, but it ultimately benefits the whole ecosystem. So that's one. And then the next one is we've got a new product that we've launched called Visa Pay. And Visa Pay isn't just the traditional Visa products that you have to go through an FI to integrate through. It's open SDKs that is going to be then openly available. And we really see that this is going to transform the way the ecosystem engages with Visa and Visa engages with the ecosystem. And much like my colleague said earlier, that schemes aren't schemes. We are technology providers, and that's really that step in that direction.
Thanks, Meagan. I want to open the floor just very quickly if there are a few questions, maybe take 1 or 2 questions.
Hi, guys. What hasn't come up today at all is mobile money. Could we just get some perspectives from the panel about mobile money, like M-Pesa?
Sure. I'm happy to speak about that. So obviously we're seeing mobile money very prominent across the rest of Africa, very big movements in DRC, Ethiopia, etc. Of course, there's no secret that M-Pesa did try and launch in South Africa, and I think that's been a case study, so you can go and discuss it over coffee later. But at this point in time, I think the biggest trend from a Visa perspective with a South African lens is more wallets and how digital wallets are going to transform as opposed to necessarily a mobile money element. But that, I mean, specifically for South Africa. The rest of Africa, we've got a very strong mobile money strategy.
It's a tough one for MTN because we've tried this a number of times in the SA market, and we failed a number of times as well, and we at it again. MTN across Africa has a very strong mobile money business with millions and millions of customers, and it does really well in a lot of markets. And I think, unlike the rest of Africa, South Africa is very different. We got like a very, very advanced financial services sector. We've got a high bank number in comparison to the rest of Africa. So mobile money in its traditional form, as what we know it in the rest of Africa, really doesn't really hold much of a value proposition for South Africa. But having said that, I mean, MTN's a strong believer that there is still a place for mobile money to play in South Africa. And I think our angle is that there are obviously some supplementary services that we're trying to create a bouquet of services for the mobile money customer. And what else can I say about that? I think I'll leave it in there. I think South Africa is just different, and I think mobile money, as you know, it's the rest of Africa won't work like that. And it's certainly, we've learned the hard way about that, and we're trying to approach it a bit differently now.
Yeah, I'd like to also just weigh in here. There's been a lot of debate around this, certainly in my new environment, and I think you're right. I think the South Africa is very different to the rest of Africa for 2 specific reasons. The one, which we've already mentioned, is that banking in South Africa is it's really accessible. It's available to everyone. So the need to, if you want to go and open a Capitec account or a Time Bank account or a Standard Bank or whatever account, it's not that difficult unless you're a foreign national. And this is where things become, there's this layer of mobile money where I think it could be successful, but the regulation in South Africa around foreign nationals, and as we all know, there are estimated, I think, at least 2 million documented foreign nationals in South Africa, and there's probably a lot more than that. And for these unfortunate individuals that come to South Africa without being officially documented, it is almost impossible for them to open up a bank account. And so I think there could be a place for mobile money for foreign nationals, specifically in South Africa, for the ordinary, barcoded ID carrying documented South African. It's not really something that's going to fundamentally change everything because the local banking infrastructure already caters for the vast majority of their needs. But if there is a way for us, and certainly from a regulatory perspective, to start either banking or providing deeper financial services to these foreign nationals that are coming from all over Africa and the world, quite frankly, and giving them access to it, I think mobile money is a potential solution for them. But without us cracking the regulatory nut, so to speak, on this one, I don't see it really taking off at this point in time. But who knows? Maybe things will change, and maybe that will open up a really nice avenue for us.
Great, thanks for the views.
Awesome. Any other questions?
So just to the panel, I do find it interesting that you say that it sounds like there's no market for mobile money, but at the same time, we've still got quite a significant cash payments. I think we've spoken about, 60-something% still cash as opposed to card or digital payments. So things like paying for taxis and that type of thing. So maybe I can just get a view from the panel, or if it's not mobile money, is it maybe a different innovation that's actually going to solve that or reduce that usage of cash?
I'm happy to go first. So our view is really that it will be a digital wallet. And sometimes people say to me, well, what's the difference between mobile money and a digital wallet? So that's probably also a thesis we can have over coffee. But it would be, in my mind, a lot of the banks and the fintechs all have a wallet strategy. And that wallet strategy is around how do you penetrate deeper and go to the lower segments. As the colleagues have said, though, in South Africa, if you primarily don't have a bank account, if you're a South African citizen, it's probably by choice. It's not that and so if we've obviously also done a lot of studies to say, understanding why don't you have a bank account? And so whether mobile money or a digital wallet's going to change that, that's also something that needs to be considered. But my short answer is digital wallets.
I think there's certainly use cases like the taxi industry and even spaza shops and stuff like that where cash is very prevalent. And I certainly think, mobile money, digital wallets, all that sort of stuff definitely can help. I think there's certain challenges there that are beyond the solution, and I think that's what's made it very difficult in South Africa to try and apply solutions to these use cases. I mean, especially the taxi industry. I mean, that's not a place that you just wander into and you help solve a problem. And there are a number of organizations. I mean, I know, the banks and the consumer goods companies are all trying to solve this problem in the informal sort of retail spaza shop environment. So, people are trying to do stuff and eventually something will take. But I think in South Africa, it's quite a complex environment to navigate those sectors.
So at the end of the day, it's all about the benefit to the consumer, right? So the consumer will go where it's easiest and there's the least amount of friction and it makes the most sense and there's the biggest amount of benefit. So it's Let me take a slightly different angle. ShopRite Checkers, Pick n Pay, Pep, a bunch of these guys, MTN, Vodacom, they have all launched some sort of digital wallet, mobile money kind of offering. But none of them have really taken off in any shape, way, or form. The angles that they're going in on are sort of like, well, I want a mobile wallet, at Shoprite Checkers, because then I can monitor the spend, and I can see how customers are spending money, and potentially I can give them something back. But they're not giving them anything really back. So until such time that we understand how to change behavior, because changing behavior is in the interest of the consumer, and the consumer understands that for me to move from cash onto a digital platform, whether it's a mobile money or mobile wallet, until we can really provide a sufficient incentive to do that, we're not going to change the game. And I think that right now there's just not enough incentive in the system. There's more disincentive in terms of, silly things like taxes. Like now there's a record of every transaction that's gone through a taxi. Do I now have to pay tax on that income, et cetera, et cetera, et cetera? That's a disincentive. It's real. And until we solve those problems, we're not going to see a significant move away from cash in those kind of use cases. And so for me, it's really about, cool, it's all great, digital is fantastic, but there's got to be sufficient incentive for people to move over. Otherwise, it's just going to stick around.
Thanks, Arno. I've got a sense there's a digital wallet startup that's going to come from today's discussions here. Thank you so much for the questions. Really appreciate it. We are going to go for a coffee break for 15 minutes. Everybody back around 3:25, and then we're going to have our final 2 sessions. There's 2 more showcases as well, and then please stay around for the cocktail event that is almost happening. Awesome. Cool.